I think the next generation is going to need to focus more on it being a people business, because the ones paying our salaries are our clients, and they want services that are best for them, solutions that work for them. And with ESG, with climate issues, with the state of things outside of finance, we're looking for solutions that don't just have a present value, the highest number wins. We're putting in elements to our products that are sometimes difficult to model out. And because of that, it's becoming more and more of a people business.
This is Net Learnings, the podcast that keeps finance and banking professionals ahead of the curve. In each episode, we focus on career growth and practical advice, while mixing in the occasional war story. Join us as we tap into the minds of leaders and experts at some of the world's most notable financial services firms and enterprises. Let's get started.
Hello and welcome to Net Learnings. I'm your host, Kyle Peterty. Today's guest is Bill Vlaad, founder and CEO of Vlaad & Company, Canada's premier independent executive financial recruitment firm. Bill, welcome to Net Learnings and thank you for joining me.
I've really been looking forward to this, Kyle.
Well, the pleasure's all ours. Now, you're a self-described reformed investment banker, and according to the company website, you've also, quote, served time in corporate development and been fired twice. So we have lots to unpack today. But before we get into any of that, tell us about Vlaad & Company.
At a high level, we are an executive search firm focused in finance, Canadian focused. And it's been around for 16 years. We have a couple of offices across Canada. And it's been a real pleasure to serve this market. We've seen ups and downs, lots of turbulent times in the last 16 years. But it's an industry that is really dynamic. It's in all the newspapers all the time. So you feel like you're making a meaningful impact. Mm-hmm. And putting people into those careers and high grading their career trajectory, it's a very empowering position. I'm really fortunate to be on the path that we've been on for the last many years with the team that we've assembled.
Your newsletter, Bill's Buzz, is the hottest weekly drop on Bay Street. And yes. I think everyone I know in financial services subscribes to it. For any of our listeners that don't, by the way, I highly recommend you check it out. I'll leave a link. What is the story behind the newsletter, Bill's Buzz?
I call it my catch-up. It wasn't designed or invented for the purposes of spreading information. It turned out it was because I was born on a Friday, and there were some moves that came out on the street over the last few days. And I said, I'm going to put those together and send it out to the people that I know. They liked it. They told two friends and they told two friends. And it became a regular publication that I put together, but it wasn't structured. It had as the information came out on the street, I would put it out on a Tuesday at 3, a Monday at 5. And a couple of things happened. One is we had a mentor of mine who called in and said, I like this material, but it's getting a bit spammy. So why don't you send it out on a regular basis? And a good time? When the market closes. Give it as like a signal to the street that it's time to go home. And we have a lot of people who read Bill's Buzz and they say, if they're still at their desk when they get it, they know they've been slammed for the day. And the other thing was the name was Bill's Buzz is kind of a water cooler talk. What's the buzz out there? What's happening, Bill? And it's become a brand that has also added the value of weekly allowing us to have a warm reach out to the candidate base out there, to all of our readers. So when we have to call them for a mandate, because we are executive search, even if we haven't reached out to them, they know who we are. We've been communicating to them in some way for 16 years. So it's a very, very fortunate happenstance. It wasn't the main reason for sending the product out, and it's turned out to be a real win for the company.
A real accidental success.
Yeah.
We love those. And that was an interesting segue, actually, talking a bit about the business. For our listeners, and I include myself in this group, a lot of folks don't really know the recruiting business or the executive search business. Can you sort of walk us through how it works?
Yeah, it is one of those businesses that everybody has heard of them, but not really sure exactly how they work. So every industry has a recruitment element to it. Recruitment firms, or agencies as sometimes they're called, are third-party service providers that act as catalysts to increase the connectivity between those that are possibly looking for work or that are capable to do a particular role and those searching for it. So think of it like and this is a really bastardized version, but I've said before, like a butcher.
Okay.
I'm the butcher standing behind the counter. And why do you come to Vlaad and Company for its candidates? Do I know where the meat came from? Do I source better organic products? Do I have a much more diverse offering when you come in? Are my prices better? And at the end of the day, it is a bit of a commodity in the sense that we are trying to line up a need from a client that is trying to add people for some problem that they have. Somebody's left, they need to grow, they've got a management issue, and I have to find someone who matches the criteria that they're looking for. So needle in a haystack, if you will. Our job is to get rid of as much hay as we can and find the needles.
That's a great analogy.
Essentially recruiting in a nutshell. And as I said, every industry has it. Within finance, where we focus, the specialization is understanding the technical knowledge, understanding the deal flow that they've worked on, some of the personalities of management, where the career trajectories are going. So that's the specialization that is necessary within finance. But, you could say the same thing in the film business or marketing or sales or pharmaceuticals. They all have their own little niche.
No, that's good. What keeps people like you in the financial services recruiting business up at night?
Other than my 4 children.
That'll do it.
You're always beholden to the whims of the market, very much so in financial services, in that, you do have a bad day in the market. You have a good day in the market. The government comes in and levels new regulations on products that today don't or tomorrow may not exist. Mergers, clients disappear.
Right.
But I think really what keeps us up is we're dealing with very high level performers, type A characters that expect a lot. And so the crossing of the T's and the dotting of the I's in this business is essential. They expect that, or their clients expect that of them, and therefore they expect that of us. So when we're dealing with trying to present a series of candidates to the client, do we know the second derivative of who this personality is and how they would fit into the culture of this new firm? And you're always wondering, have I missed something? Is there someone else I should be contacting? Is there somewhere else I should be looking? But with time and experience, you get comfortable with recognizing you can't boil the ocean. And recognizing that makes me sleep a little bit better, I guess.
Your team has a terrific reputation in the
Thanks.
financial services world. Maybe give us like the 30-second elevator pitch, why they should choose to work with you. And maybe we can take it from 2 angles. So the first is for companies, or I guess your clients. And then the second is for candidates or individuals. Like why and how should individual finance and banking professionals engage with you or your firm?
They're great question. It's a tough thing to answer because every client has a different need. In one of our presentations, we actually open with, what is your problem? What is your, not what's your problem? What problem are you trying to solve for?
Right.
And based on that, our solution will be designed. But generally speaking, I think that one of the strengths that we have is we know this space very, very well. If you were trying to hire a CEO of a telecom company or a chief operating officer of a ball bearing company, we're not the firm for that. But when it comes to finance in Canada, there is very few corners, pockets, hallways that we haven't walked down, that we haven't mapped out, that we haven't really taken the time to get to know and also provide commentary on. I think it's not just about knowing who the bodies are, but being an advisor to the space and giving the context for what is happening. Why is this candidate within the universe and the context that we're in currently? Why are they best suited? So things like our fall call, the Bill's Buzz newsletter, our compensation surveys, things like that add the value to recruiting beyond just finding a body. And I think another thing is we work from new graduates all the way to the C-suite of the firm. And we think that's really important because when our clients ask us what's happening out there, they ask us that because they want to know across the spectrum what is happening out there, not just what's happening out there in the executive boardroom or at the management level, but what are the vice presidents thinking? How are the analysts and associates negotiating their summer internships, and what's happening with new hiring of out in Vancouver or what? So you have to have that cross the spectrum exposure, and that's what we've always built our firm around.
Yeah, you have a really interesting cross-section, a very large cross-section of financial services. So
Thanks.
Super interesting. Love to talk a bit about your career experiences, particularly your time in financial services and maybe some lessons learned there before we get into kind of how that led to the recruiting business. So if I understand correctly, you started your career with BMO Capital Markets. Maybe we can start there. How and why did you get into capital markets originally?
I actually started at CIBC with Gundy first out of school.
My mistake.
And that's a really interesting story and a story that speaks to where the market was then versus where they are now. Anyone who's worked with me knows that I wasn't the world's best investment banker, which is why I'm doing what I do now. If I was a great investment banker, I would still be doing that. I loved the industry, but the industry requires a discipline and a cadence that it didn't suit Bill Vlaad. But I really liked being in the atmosphere. So the story goes, and it is, at least for me, interesting. Coming out of school, or actually I wasn't even coming out of school, I was still in school. For those that are listening to the podcast and are still in school, recruiting happens day zero. They're coming into campus. And at that time, I had worked in a sphere that had nothing to do with finance. I was in international development over in Africa, came to my MBA at Western Ivy, and was expected to put on a suit, which I didn't even own, and go in front of companies that were asking questions about depreciation and amortization and how to balance a balance sheet and how to, the DCF modeling and all these technical questions. And I didn't know, top from bottom, but what I did know was I grew up in a pulp and paper family in a small town that I was in and out of the pulp and paper mill as a summer student in many different capacities. And at the time, they were looking for somebody who knew something about how pulp and paper was made. And my interview essentially consisted of, what do you know about a batch digester versus a continuous digester? And what's the difference between long and short fiber pulp? And I can answer those questions. And the person who hired me had the courage to say, that kind of knowledge, you can't
train that.
You're in the program right now, focus, and we'll see you in a couple months. Now, that spoke to an environment where it was very much a candidate-driven model at the time. They had a tough time finding people who fit within different groups, understanding the full technical spectrum. So they could hire a little bit more courageously. Today, it's not that environment. And what we've seen happen over the last 16 years is much more fine-tuning. I call it the Starbucks modeling of recruitment. Is you're looking for the extra hot, non-fat latte with sprinkles on top, like very, very specific. And the generalities, getting somebody because they're a good thinker or a proven talent in something, has a risk component that doesn't often get past the hiring recruiter. It's just a little too risky in this market to hire based on passion. And so it speaks to how the market has evolved over the last 30 years, a little while.
Over the last few years.
Mm-hmm.
And so was BMO Capital Markets the next stop?
Yeah,
then?
so CIBC into BMO Capital Markets in forest products. There was a period in there where there was some transition. I went into the debt capital markets team. Very interesting transition from investment banking down to a product group. That didn't resonate well with me. That's when I got laid off. It was a great decision by the firm. I think it was probably 2 years of additional credit that they gave me sticking around. They probably should have pulled the chute before, but they really did show a faith in me to develop into a more mature investment banker. It was a time and a place that didn't resonate for, again, as I said, my cadence. And the cadence aspect is something I'll come back to again, because that's one of the things that we look for in professionals is technically you may be strong, culturally you may work with the firm, but does the product that you're servicing, does it work for your cadence? I have 4 sons and each one of them beats to a different drum. And when I am helping them guide through their career, I ask them, is this type of role that you're looking at, does it beat to the same rhythm that you're looking for? And it takes a lot to look inwardly and say, that's not right for me. And especially with young professionals who are the energy and the excitement of getting a job, sometimes they don't want to see what's in front of them as being an obstacle or as not fitting. It's more of, let's get in and deal with that later. But real career success, I think, has a lot to do with finding a place where your rhythm works. And for me, the rhythm wasn't working in investment banking. I ended up going into corporate corporate development at George Weston. Great career opportunities. Corporate development is a wonderful opportunity to see the inner workings of a company, and especially one like that where it's very family oriented. It started and it has a long history. From there, when I started in that particular role, the share price was X, and then 18 months later, it was half X. And there was a large restructuring that went on as a result. I was part of that. And it was the first time where I found myself flat-footed and not really sure what the next step was. And I went to go see a recruiter. I went to go see somebody like myself, and I was very honest with them. And that's another thing I would tell people is, I can only be as helpful as the information you share. And if you tell me that you can slam dunk a basketball and you can't, when you're hired, slam dunk a basketball and you can't, that's on you. So you need to be honest with the recruiter as to what your capabilities are, what it is you really want to do. I was very honest with this recruiter, and he looked me in the eye and said, have you ever thought about this career? And I hadn't. I spent some time reflecting on it, talking to a lot of mentors. And, fast forward a few months, I found myself in the space and very thankful that I did, because it answered a lot of the wants and needs and desires that I had at the time that I wasn't really aware of several years earlier as I was grinding it out in investment banking.
Right. And much better aligned to your cadence, as
Right.
you were saying. Yeah. You meet and interact with, so many people. You must have some funny stories or anecdotes from over the years. Is there anything you'd like to share with our listeners?
The funny stories are probably fewer than you might think. The scary stories are more the ones that resonate.
Scary's good. Our listeners like scary.
Scary is, there are people out there that just don't have the self-awareness to, in this marketplace, sorry, not this market, but this industry, there are a lot of very strong performers who can't look themselves in the eye and admit to a fault or a deficiency. And sometimes that perpetuates or culminates into real problems. And so some of the scary stories that we have are, candidates who are notorious liars. They actually have a problem with telling the truth. And in good recruitment, you ask enough questions, like a police investigation, that you can usually triangulate answers and find where there might be cockroaches lying in the corners. So those are the stories that tend to resonate around our firm, because it's how do we do the business better? Funny stories, you get people who come in and they've got a huge ketchup stain on their tie, and they're super embarrassed and sweaty because they just were down in the food court and spilt their lunch on their tie. Those are just fun little humorous anecdotes, but the ones that really resonate in terms of improving a business come down to making sure that we do our job really, really well. Other funny stories that we have, there's more than one dog named Lassie in capital markets and investment banking. And there are a couple of, John Smiths. And we had a scenario where we were interviewing let's call it a John Smith. And we had interviewed the John Smith on the paper, had the John Smith, up and down, sideways, really good person. In walks the John Smith for the in-person interview, and everything was unaligned, misaligned. And we found out that we'd actually contacted the wrong John Smith for the in-person interview. The same thing happened. One of my first days as a recruiter, I didn't have an office. I was working out of Starbucks, and I was meeting a Mike. And I'm sure you've met people at Starbucks And
Yeah.
you say, I'll meet you at the front
Mike?
of the, you Mike? Yeah, Mike. And I sat down with Mike and I started interviewing with Mike. In 5 or 10 minutes, this isn't going well. And I realized that the mic I was waiting for was still standing at the door and I had a different mic. So, those might be funny to me, probably not as funny to the listeners, but we take this job very seriously. We're not saving lives, but we recognize that this is probably next to somebody's family and maybe religion, in some cases, the most important thing in their lives. And so we try to come in with an EQ and a respect, an empathy for what the individual is going for. And so not a lot of it do we find funny, because when they're uncomfortable and sweaty and disoriented, that's not funny. It's not funny to them. And so we try to appreciate where they're coming from and move up and forward. And one of the things I used to do, don't do it anymore, but I used to start a lot of my technical interviews with the question, please tell me, what are some of the main differences between the binomial pricing model and the Black-Scholes model?
Is the first question.
And you just see their face just whiten. And then I say, I'm just kidding. I'm not going to ask technical questions like that. And just, it gets them off their concern, their gate of, is this going to be high intensity? I don't know where Bill's coming from in the interview. And I just put them at ease by saying, let's just relax. I'm not going to be asking questions like that. How are you doing? Tell me how you are. And when you do that, you're getting more genuine answers from individuals. I really want to know who these people are. I don't want them to tell me the story that they think I want to hear, because I will place a person that doesn't exist. I want to know who you are, essentially, as the essence of who you are. That will make me better at doing my job.
I'd love to unpack that a little more and just kind of talk about the recruiting business. Is, a lot of our listeners and members of the CFI community are either in banking or finance roles or aspiring to be. And so I think you have so much valuable expertise here. If you don't mind kind of peeling back the onion a bit, what kind of trends are you seeing today? And just for timestamp purposes, we're in Q3 2023.
Yeah. Well, right now there's a lot of trepidation. If it bleeds, it leads, as they say in the media. And the media really is latching on to stories of restructuring and layoffs and
pending recession,
demise, doom. Yeah. And while it's a good reality to always keep an eye on, there's a lot of hopefulness. This is a market where individuals are restructured in large numbers. And in that, to the Cadence aspect, there are people who will fit a different cadence much better. And so the smart money, maybe it's not the right way of putting it, but the courageous hiring manager will say, I want to find somebody really solid out there and high grade my team, bring in somebody really impactful. And so one of the trends we're hearing, or not just hearing, we're experiencing it firsthand, is quiet hiring. So you may not be on the billboards or the job boards, or it might not be splashed around in the news that, we're hiring 100 people in this particular product, but there's still good hiring going on. Now, how do you position yourself for roles like that? It's very different. You have to be laser focused. And if there was anything that I would say that is consistent over the last 16 years of us doing this business, is a rifled approach to job search is always a more effective one than shotgun. You're going to get exactly what you hit if you're using the shotgun. Some of it will be in the bullseye and some of it will be off the range entirely. And if that's what you end up kind of married up to or aligned with is just happenstance that it got shot in the process because of your rifle, or because of your shotgun rather, then 2 or 3 or 4 years down the road, when it doesn't quite work out like you'd hoped, you don't really have anyone else to blame but yourself. A rifled approach is always the more effective way of going through a career. And what that requires is a lot more due diligence, a lot more thoughtfulness, a lot more homework on your part before going into a job search, and knowing where you want to put your hat, not just taking the first job that comes around and saying, okay, that's good enough. This is the next train. I'll jump on the next train. But having a calculated plan and actuating that, and it'll take more time. your chances of transacting is less. But if you go deeper, then you're getting a much more well-rounded interview experience. You're going to present better. You are going to be asking the types of questions that really get to the heart of whether or not it's a fit for you, and likely have a much more successful career. Now, I recognize people have to pay bills, and sometimes you have to take the job that's in front of you, but I'm speaking to a longer career development strategy, and the rifled approach always better. And that's the environment that we're in right now.
Okay. Another terrific analogy. Are there any particular skills or roles that seem to be in really high demand at the moment? I'm thinking maybe like, data skills, coding skills, ESG expertise, something like that.
Right. I would say the one that I have the biggest question mark about is the AI. It didn't exist in March of this year, and look how far it's progressed. And therefore, a lot of things about coding and programming, it's up in the air. I don't really know. But let me speak to ESG. That is a hot button. It's been a hot button for some time, and I think it will continue to. The interesting thing about it is its definition is it varies quite widely across the street, and there has been a increased number of programs that have been offered to give you, ESG quality experience and education. How you deploy that and how you employ somebody with that is still a bit of a new horizon. And so it's a hotspot, but in that there are a lot of landmines that you could possibly step on because the definition isn't clearly laid out yet. So we have seen, although a lot of mishiring in that particular space, because what has been asked for hasn't been delivered, or what has been promised hasn't been delivered. And that's because of this evolving definition of what constitute ESG and how do you actually determine success in it? What are your KPIs in that particular space? Along those same lines, the impact investing is very big in the street. And again, how do you actually measure success in that particular space? And how do you differentiate yourself from others when the definition of impact is still relatively nascent? Other hotspots that are, let's go back to our traditional economy. Mining is a space where, it's coming back around again. And the amount of demand that we have from clients for individuals who have good mining clients and experiences in mining transactions is heating up once again. It was, nowhere to be found 2 years ago, and it's starting to rear its head. Diversification is a constant problem in this industry, but I would say that speaks to many different industries. I think one of the positives or one of the evolutions of recent months, maybe it's, recent years or since COVID, is the definition of diversity has evolved as well. And that might be to try and release a little bit of pressure from hitting certain targets that have been imposed internally for diversification. But that can be used for good and for evil. So it's definitely a hot topic and requires a lot of early nuance and understanding before jumping into a mandate. Is when you say DEI, what exactly are you trying to accomplish, and how are you going to actuate that change? Yeah, I would say those are probably two of the bigger things that are the trends out there right now.
So you just touched on something interesting around DEI when it's embedded in a mandate. And I guess something I'm curious about is when you do get a mandate from a company, sort of on average, how market ready do they tend to be when they come to your firm? I guess what I'm asking is, like, do they usually say, here's the post, go find us a star? Or is it more like, we're looking to fill X role with somebody that has, Y experience and Z years of expertise, and we want your input? Like, how many blind spots do they typically come to you with?
You get a whole wide range. And it's interesting because there are clients that are easier to deal with than others, and their level of preparedness is not often a good indicator of how smoothly a search will go.
Oh, interesting.
Yeah, you would think that the client who has all the T's crossed and all the I's dotted and, every variable considered would be an easier search to find or to close. That's not always the case. I think the most critical element of a successful search is really understanding what the key drivers are for the search. What is the problem you're trying to solve? And having a client recognize that you can't hire a purple squirrel. It's an analogy. I don't know why purple squirrel is a big thing in recruiting.
I have heard it before, actually.
Yeah, it's the unattainable, right? I want a right-handed pitcher that we're going to pay no money to and can hit 56 home runs a year. You can't have all of that. What is really important? And so a good recruiter spends its time in the early days really getting down to what's the most important thing. Then what is the second most important thing? And no level of preparedness is going to get you ready for that. You need to ask those questions as a recruiter, really getting down to the brass tacks. But I think also when you outsource something as important as hiring a key individual in your team, there is a responsibility for the recruiter to manage expectations. And so sometimes when a client is not prepared at all, that's fine, as long as you kind of hold their hand and walk them down the aisle effectively and let them know, down the road what is going to occur, what is most likely to occur. That's where most of the value from a search firm is derived. You don't have the luxury in the 11th hour when candidates are throwing in variables that weren't considered until the 11th hour for either strategic reasons or because we're dealing with human behavior, right? I mean, we are irrational creatures. And so things do take sharp left turns in the middle of the night. And preparing a client for those possibilities is really where it comes down to a successful search or not. So yeah, it's not always about how cleanly written the job description is or how prepared the interviewer is when you show up with, in your nice new freshly pressed suit. A lot of it comes down to behind the scenes, whether or not the stage manager has the show under control.
In your view, what are the most sort of sought after roles at various stages of a candidate's career? Like, not that many people will even get into investment banking, for example, let alone make MD. Right. So what are some of kind of the more common career paths that you tend to see? I know you mentioned corporate development was like a really cool place to work. Like, maybe tell us a little bit about some example career paths that you see.
It's interesting because in different jurisdictions, so I'll answer it two ways. The first one is that in certain jurisdictions, the products don't exist. So let's say, for instance, leverage finance. It's a very common product in the US and in London. It doesn't exist at the same density in Canada, as an example. So you can ask for that kind of job as much as you want in Toronto. They just are not around. So the demand might be there, but the supply is not there. Now, so your question is, what are some of the more common roles? I think that it's like many industries, there is like a apprenticeship type of pathway. If you follow that apprenticeship pathway, your opportunities are greater. So there's many reasons why we take philosophy or law or business, because it's a nice background to expose ourselves to many different considerations. If we get into underwater welding, you're pretty much, limited to underwater welding as a career. So within the markets, investment banking does tend to be a place where people like to at least start their career. You do find that the transition is pretty quicker as the years have gone on. 16 years ago, it would be unheard of to see somebody move before 2.5, 3 years into a private equity role. Now that's maybe a year and a half, and after 3 years, they might have been in their third job already. The corporate finance roles at accounting firms are really good entry-level points as well. You gain a wide spectrum of different products in a short period of time. You have to work with your peers in audit and tax and consulting in one project. So you touch a lot of things in a short period of time. I think that there is a general trend to go from the sell side to the buy side. That tends to be the path of most traveled. It's difficult to go not difficult to go the other direction. It very rarely happens that somebody goes from the buy side back to the sell side. There's something that there's an extenuating circumstance of why that's happened. And there are also pathways that are very difficult to travel unidirectionally. So as an example, research, right? Very technical. It is very independent. You don't see very many people go from that space to investment banking. You could go from investment banking into research. That happens sometimes. Sometimes you can go from research into sales and trading, but you don't find the reverse happen very often. There's also a pedigree. Some roles are just very, very hard to find. And as a result, they have the pick of the litter. So the asset management, and you can call that with many different definitions. You can call that private equity because you're essentially managing assets, right? You can call that the typical buy side asset gathering, portfolio management type of asset management. Those roles are fewer and farther between. And because of that, two things happen. One is people tend to stick around in those careers a lot longer. Maybe they know the asset that they have. They know the great chair they're sitting in. And the second thing that happens is because there isn't a lot of movement, they don't hire a lot, they can pick from the best of the best. And there are just certain places that they tend to pick from. What we've seen during COVID, however, is with a reduction of the talent pool, firms got a lot more, hiring managers got a lot more creative in their hiring methodologies. And so they picked from areas that they may not have picked from in the past. They may have taken other career trajectories that they hadn't considered. Maybe the portfolio manager gets somebody who was in operations at a particular company because they saw how they operated in that oil services business and they wanted to get that technical skill set into the system. Or they may have picked from a school that they didn't have the exposure to because now the technologies are such that you can hire from a university that is farther away. You didn't have to go to the campus to hire. So there were actually a lot more barriers to entry reduced because of the, again, necessity is the mother of invention. You needed bodies, and so you had to be creative as to where you hired from. But generally speaking, the creativity has a lot to do with the financial culture of the country. The U.S., because they have a lot more financial products, they can take a few more gambles, a few more risks. In Canada, you don't have as many products, and therefore you don't have as many people. Therefore, you have to be fairly center of the lane in terms of how you actually hire. And so that's one of the challenges as a recruiter. As creative and as talented as you may be, if you are not a round peg, I may not be able to put you into that round hole. It's just, it's not, don't shoot the messenger. It is because the hiring manager has very definitive requests, and there is an element of risk they're not willing to digest with hiring outside of those very defined qualifications.
That's a really interesting segue. We have a lot of young folks kind of in our ecosystem, and you've probably seen this before. They want investment banking, PE, maybe some of those traditional buy side roles like asset management.
Right.
I think a lot of folks don't understand the full financial services landscape. And given how competitive it is and how hard it is if you're not the exact, round peg to fit into the round hole, can you give us, in your view, 2 or 3 or maybe more kind of roles or functional areas in financial services that you think are underrated, right? Like maybe you can't get that capital markets gig. Like what's another role that's interesting?
Think of different asset classes, like real estate, for instance. There's a lot of people that just shy away from real estate. It's a great space. You see a lot of, and we understand the assets. We live in houses, we work in buildings, we get what we're doing. Some of us have never been to a mine before. I don't know how they pull these rocks out of the ground. Yeah. So being able to work in that kind of space when you deal with capital allocation or when you're dealing with various financial products, short-term, long-term, equity, debt, preferred, and how they work within a space like real estate, you can attain a lot more knowledge quicker because you can relate to the asset class. So that's something that I think would offer more opportunities. I'm saying real estate, but there's a lot of other, I say a lot of other spaces, and you can ask me for 2 others and I'm gonna blank out. The fixed income side is also an area which has always been the sickly second cousin. For some reason, it's never been as sexy and has been sought after, but the exposure that you get to so many more different types of investors, different styles of investors, different durations, literally lengths of investments, and why, and the purpose of each one of those, you're gaining an understanding of not just what happens today, but what could happen 20 or 30 years and how that impacts a firm's financial capital needs. So the fixed income side of the business has a lot of, and I don't mean this to be, I was going to say derivative products. I don't just mean derivative products, but products that spin off of the main product line of fixed income. There are interest rates and other optionalities that you can get into that there's a depth to that business that tends to get lost on a lot of new people. They just take the investment banking or the equity route and hope for the best. A lot to be learned on that. There's also a lot on the asset management project finance side where you're dealing with maybe a slower cadence, more thoughtful, larger institutional products. I'm thinking of the Manulifes of the world and the Fidelities and the CIs. Those are huge companies with a ton of opportunity that often gets missed in the classrooms or when they're coming to present to the classrooms of the great career opportunities. For another reason, then maybe it's a lesser known. And so that's where the rifle approach from earlier comes into play. The blue ocean strategy. Why swim where all the sharks are? Why don't you go somewhere where there aren't as many sharks and you might have a greater success? And I missed a really big component of career opportunity that I think that your listeners could value. And that is, I've been speaking mostly to the institutional side. There's a whole retail aspect to the markets that is huge, and we know how that works. We all have our money invested in some things, some way. Mm-hmm. So don't forget about that aspect. There is, the wealth management side of the business. There is, on a trading floor, there is a huge component that is dealing with the institutional, and there is almost equally the same size on the retail side. So for every product on the left, there's probably a product on the right.
Yeah, no, that's terrific. Can you talk about career change in general? Like, it's hard, right? I mean, I can honestly say personally, I've never taken a position that I didn't, at least at the time, feel like I could see myself retiring at. And maybe that's because I'm a little bit old school. But in your experience, like, how and when do people know that it's time to make a move?
That's a good question. Do you remember in high school or university, that first love, and you had to ask your buddy, I just don't know if it's working out. Well, if you have to ask your buddy if it's not working out, it's probably not working out, right? And the careers are not that different. However, I would challenge you on this, and that is, it's not often a passion until you're really good at it. And so people say, well, I just don't have a passion for this. It's too early. It's too early. You don't wake up and have a passion for woodworking until you've woodworked for many, many years. You're just doing the do. You're just trying to learn how to be good at it. Once you're good at it, then you can get passionate. So I would say too many people make career changes too quickly because they are unhappy or antsy because they're not excellent at it. There's a lot of this business that you're going to be not excellent at. And what I would say happens more times than I wish to see is people don't spend the time to analyze this situation with their own management, with their own hiring, or with their own manager. And I would say that is a lost opportunity. If you were, back to that relationship, if you were having troubles in the relationship, would you just pack your bags up and leave? Or would you sit down and say, listen, I don't know what's happening here. I don't know if this is working out. There are a lot of people who come to us looking for a new opportunity. And one of the questions I insist that our team asks the candidate is, have you socialized this? Have you talked to your manager about the reasons why you're here with me today? It might not be, hey, I want to go see Vlaad and Company to look at this opportunity, but you're looking at a new opportunity, which must mean that you're either unhappy with where you're at, or it's not fulfilling whatever considerations you're looking for career advancement. But have you talked to your own shop about that? The tension and stress that comes with the change of human equity, moving from one shop to the next, should not be underestimated. It's a lot to figure out, who your seatmate is and where the bathroom is, and what is the proper rapport with your boss, and that creates a lot of distraction in a career. And many of those things can be eliminated just by saying, hey, something's not working where I'm at currently. I just need to work on that for a little bit and give it a really good try, as opposed to just saying, all right, I'm going to turn a page because I'm upset today. So how do you know if it's not working? I think the answer lies somewhere deep within you. And unfortunately, people often don't go deep enough. They just take the superficial angina, and they don't go any deeper than that to find out if there's actually real structural problems.
You and your team interact with probably tens of thousands of finance and banking professionals a year. Are there any like skills or characteristics that the most successful people tend to share or have in common?
Sure. I think a real genuine sense of curiosity. Most of the jobs out there require you to do due diligence. We hear due diligence, right? Well, due diligence is digging and digging and digging and digging and really making sure that you're not just getting the answer you want, but the answer you need. And that is, comes down to cadence. Some jobs are easy and the answer comes quick, and others you spend a lifetime digging through. That's one of them. Empathy. You're dealing with other people's money very often, and you think, well, capital markets and financial services and the market, making money. That's the least humane business there. Empathy goes a long way in this space, and more so as banks and financial services providers are trying to differentiate themselves. Empathy is playing a bigger role, because you have to ask yourself, my client, what does my client want? What is the most important thing for them? And I'm going to solve the problem I'm looking for based on what is best for them. And that takes a sense of empathy that goes beyond just what your own personal objectives are. And we forget that sometimes. We come in and say, it's, how do I make the most amount of money? Well, the first question you should ask is, what's the right thing for my client that will then make us all the most amount of money? So, and another thing that I think is really important, especially for young people, is a sense of humility. It is not a career where you are going to have everything turn out the way you want it to. It's a very dynamic industry that's been evolving for hundreds of years, and it will continue to evolve. And the solutions today are not the solutions that are going to work tomorrow. And that means you're going to make mistakes. And so you have to be respectful of the fact that this is a career development. You are trying to build your toolbox. You don't just show up on day one with all the answers.
Right.
And unfortunately, that's lost on a lot of people, and they try to blame their tools when things don't work out. But really, if you spend a moment or two and think about it a little deeper, it might be because you don't have the humility to recognize the solution starts with you.
So curiosity, empathy, and humility.
Three very, I don't know if you were expecting those answers. We can talk about technical toolboxes, and we can talk about showing up early to meetings and always wanting to do more and rolling up your sleeve. And those are important. But, I think for me, it's always been, do you play well in the sandbox? And those three variables that I just discussed kind of will take you through not just this career, but I think many different types of careers. Yeah. But in this industry, there's a lot of people who veer out of the industry. They start here, right, one of your earlier questions, and they veer out. So working on those particular skills will mean that you will be as effective as you can be in this industry. But if you recognize the cadence is not right for you, you don't have to start over when you go somewhere else, because you've already built those really critical elements of humility, empathy, and curiosity.
No, I don't know what I was expecting, but those are really, really good answers. And I think, to your point, they'll carry you forward, whether you're playing in this sandbox or having to learn a new one. Those are sort of three cornerstones of being able to be adaptable as well. Is finance a numbers business or a people business?
Mm-hmm. It's becoming, it's hundreds of years old, but I think the next generation is going to need to focus more on it being a people business, because the ones paying our salaries are our clients, and they want services that are best for them, solutions that work for them. And with ESG, with climate issues, with the state of things outside of finance, we're looking for solutions that don't just have a present value. The highest number wins. We're putting in elements to our products that are sometimes difficult to model out. And because of that, it's becoming more and more of a people business. Again, I think that's another reason why those three variables of success, the curiosity, humility, and empathy that I discussed, will play a bigger role, because you're trying to solve for problems that you can't just put into Excel and expect the right answer. It requires depth of character and knowledge of your client that probably has never penetrated the street as much as it has, as it does today.
Great answer.
Thanks.
If any general career advice do you have for our listeners? Sort of one or two key takeaways.
Trying to solve the career question for hundreds and hundreds of listeners in one simple: be true to yourself. This sounds all very esoteric and kind of, hippy dippy, but what I see happen more times than I'd like is people setting themselves up for disappointment by not being true to themselves of what is really important to them. It takes a lot of courage to say, that's not going to work for me. That's not the right thing for me. And as I said earlier, I know bills have to get paid, but what's really painful is getting fired. It creates a definite part of your professional DNA is taken away from you. And I'll tell you, the present value of that loss is a big negative. So if you spend some time at the beginning and really be true to yourself about what it is that you want, I think you'll save yourself in the long term a lot of heartache. There's a lot of people who are, the school system perpetuates this, right? There's larger and larger numbers. The number of CFA and MBA and LLBs and the accreditations that we get are just at record high levels. And we assume that that's what it takes to be successful. Just keep hammering on all of these letters after our name. But at the end of the day, it comes down to, who am I and what is it that I really want to accomplish? Now, I'll tell you, being sort of the, hey, I'm going to put it out in the universe and the universe will answer to me, doesn't work in finance. Okay. You do have to work for what you want. But if you're blind and just kind of putting your head down and running out into the markets, hoping that something is going to, whatever the first thing that you run across is going to be the right thing, you're going to set yourself up for disappointment. So spend the time to really figure out what you want and do that analysis frequently. What you wanted at 23 is not the same thing you wanted after when you're 33 or 43. So spend the time to do it almost like a career coach. I'm not a career coach. There are some good ones out there. But, you would spend a couple of $100 every 6 months working on your car and making sure that it runs well. Why don't you spend some time on your career, spend a few dollars on it with a career coach to make sure that it's also fine-tuned and that you're getting what you most want out of your professional engine.
We're coming up on time here. I want to be respectful of your time, but before we go, what can I, or maybe members of our audience, do to help you?
We love information. I mean, that's what we thrive on. We can't do our job unless we know what's going on out there. And, we have our Bill's Buzz where there's moves and people just assume we know what's going on. We love to hear what's happening. We're not gossip mongers. We want to understand what is moving the market. We're not looking for tattletales. We're not looking to find, the cockroaches in the industry of what's not working necessarily. But, so it goes both ways. We share as much as we can, but we love to hear. We love to know what's going on out there. There are opportunities that are popping up all the time in the market. And if anybody has a need to hire, I mean, that isn't an easy thing, but also, we're there for your listeners that if they need to know more, they can reach out to us as well. We have things like the fall call and Bill's Buzz to try and solve a lot of those solutions or give a lot of that information away to a large group of people. But it goes both ways. We will, if we receive, we shall give as well.
Okay. And we plugged Bill's Buzz, but where can people go to connect with you or your firm?
VLAADCO, so vladco.com. That will also tell you when these various products are coming out, like the fall call. That's probably the best place. It also, we post all of the current opportunities that we're working on our opportunities page. And there's an opportunity there. There's a place where you can send in your information. It doesn't necessarily mean you're applying for a role, but just so that we know you're alive.
Yep.
And it keeps us in this, it keeps you in the flow of what's going on in the market.
Bill, this has really been terrific. I want to thank you so much on behalf of our listeners for your time and your wisdom today.
Well, the pleasure's really been all mine. I've really enjoyed this conversation. I hope it's been helpful to your team. And if you want to follow this up, you nail this as Q3, you want to do this again in the future, I'd be more than happy to do it with you.
Love it. I can't wait. We will definitely be reaching out.
Take care.
Thank you.
listening to this episode of Net Learnings. This podcast is powered by CFI, an organization on a mission to enhance the skills, knowledge, and productivity of finance and banking professionals. If you enjoyed what you heard in this episode, make sure to follow Net Learnings wherever you listen to your favorite podcasts, or visit us online at corporatefinanceinstitute.com/podcast. See you next time.